XRP all-time high. The chart, I mean, really, if you just look at it, will leave you breathless. If you're an XRP holder out there, congratulations. It's a massive move. Ethereum right now, the busted pattern, it is playing out. And for altcoins, what this means, as many of you know if you watch my channel, it's massive. Cardano right now on the weekly, putting in its own MACD indicator, which is signaling the very, very, very beginning of a Cardano bull move. And all the while, our risk score in our intelligence system for altcoins sitting at a 25, a very low risk score. Hit the subscribe, hit the like on the way in. If you're not in our intelligence system, click the link below, check it out. We have a very big 40% sale still going on. We've got members coming in, planning their exits, using our risk models. So please check it out. Before I dive into XRP, Ethereum, and Cardano charts and everything that's happening with altcoins right now, I have to go over just two pieces of news very quickly. I'm not going to take a lot of time. This is one of them. This afternoon, the House passed the Genius Act, soon to be the first ever crypto law in our nation's history. It's crazy to even read that. This was obviously the headline news of today. Not to mention that the anti-CBDC got through, as well as the Clarity got through. That's going to the Senate. Really big news. Shortly after this happened, though, another headline just came into play, and it's a massive headline. Donald Trump set to open U.S. retirement market to crypto investments. President preparing executive order to allow 401k plans to tap broad pool of alternative assets. So the best question to ask, right, to try and figure out, well, how's that such a big deal? Like, you see retirement, it's kind of like, that's boring. Here's why it's a big deal. You ask yourself, what value is there that's kind of locked in the retirement market that's not in crypto? What's that value? $9 trillion. Trump is preparing to open the $9 trillion US retirement market to crypto, gold, and private equity. We talk a lot, especially with like the Genius bill, for instance, the stablecoin bill. Trillions are getting ready to be unlocked. We talk a lot about that because the markets really are still small markets. The crypto market's still early. So trillions being unlocked, we talk about it with like the Genius, but there's multiple floodgates here. This is one of them that just came out of nowhere, and this is a really big deal. So Trump expected to sign an executive order as soon as this week that would open up 401k plans to alternative investments beyond traditional stocks and bonds. Really cool news. Let's do some analysis on these charts. XRP, there it is, breaking all-time highs. Before we even really get into the analysis that I want to talk about in relation to XRP, Ethereum, and Cardano, I want to mention something. We get these nice little bull environments, green candles. It's go to CoinMarketCap. Everything's green and looking bullish. Please be ready for dips. That's all I'm going to say. Even if we're at the very beginning of a bull market, even if we're about to enter a 1 year long bull market, and I'm not saying that's what's happening, but if that's the case, that'd be great. But even then, when we start getting overextended, something like an XRP chart is a good example, and the 20 is crossing, this 20 moving average crossing above the 200, the 50, just be careful. Be careful for, nope, time to take a break. Whether it's sideways, whether it's a big crash back down, just be careful. XRP, even if it's going to enter continued highs and hit targets that we have on this channel, there's a $5.30 target. Here's a potential $8 or so target. Even if that's going to happen, XRP might find itself back in the twos. So I wanted to mention that. Now, XRP, I wanted to bring up the risk model for XRP to prove a point. And this does not matter if you're a member in our intelligence system. This will be valuable. XRP is sitting at a 64. And you might be like, man, that's like kind of getting up there with higher risk. And it's even categorized as a moderate sell in our system. But when you start studying the data, a picture becomes clear. So here's last cycle, the bull cycle. XRP underperformed. It did not do well because the SEC was just ruining everything for XRP. And it's a big shame that it happened. So 2 cycles ago is very much a better area in terms of price action, momentum, XRP narrative to look at. Look at the risk model of XRP back here. Pre-bull market, like going into it, 76. Cools down, and then boom, swing high, goes to 100, 99, and then cools down again into the 40s, 50s, 60s, and then boom, next swing high. So just notice the 60 area on XRP, and this is crazy to say, because XRP is sitting at all-time high right now. But this 60 area for XRP, even for XRP, if we look at previous data, is like a pre-bull move. So sitting at a 64 is one way to look at it, but dissecting the data and understanding the way in which this model has reacted in the past is a better way to look at it. And even more so, to go on a deeper level, I think studying something like the Bitcoin risk model, studying how Bitcoin, if you go look at Bitcoin risk model, the way in which it is operating, it is just consolidating with these higher highs and higher lows in a way that it's never done before. So when you start looking at something like an XRP risk model, maybe that's what happens. You can even see this. I mean, just in January, we're sitting at a 75. Did that mean the bull market was getting close to topping out? No, it didn't. It was just, that was the swing high for XRP. It cooled down for months, obviously, as you know, and now we're at 64. But what if we just go to a 75 again and then it cools down? 75, like who knows how altcoins and crypto will react in this market? It doesn't have to look like previous cycles. And there's a very good possibility it doesn't. Ethereum right now, just look at Ethereum. And then the inflows are just next level. And then I do want to look at the charts because it's very, very meaningful for altcoins. $499 million inflow on the 16th yesterday. That was BlackRock. Total, $726 million into Ethereum. And please keep in mind, this is Ethereum ETF. Altcoins, a bunch of different altcoins, they have their ETF filings in play. The altcoin ETF storm has not even hit yet. So there's a lot happening now, right? Trillions coming in, pro-crypto legislation, retirement accounts getting access to crypto, ETFs are filed for, they're not even in play yet. Like there's a lot going on, but the storm is absolutely brewing. Here's Ethereum on the monthly. So I know I mentioned it before, I think in yesterday's video, just keep in mind on the monthly, a ton of upside. We really are, from a momentum perspective, in this territory compared to last cycle. And that was pre-bull market territory. So without even looking at a risk model on Ethereum, we're in pre-bull market territory from a momentum perspective. That's not to say it's absolutely going to happen, but we're getting really nice signals that you just can't ignore. We broke this entire lower high trend. We broke it. We're above the moving average line on the monthly. And right now what's happening is Ethereum has broken back into the apex of the symmetrical triangle. This is the busted pattern I've been talking about really since like the beginning of March, all the way back here. The busted pattern is basically, let me put it this way, in case you've not heard of it. We get the break to the downside and it's like, oh no, multi-year symmetrical triangle broke down. We're going straight to the target, $500-$600. Or maybe we won't go straight to it. We'll pull back to the trend line and then we'll make our way to it. That's a normal technical move. The reason why I've been calling for this busted pattern and I've been so set on it, breaking back into this apex, is because if Ethereum was going to break down to this target out of the symmetrical triangle, it would be in this type of environment. This red line, for instance, the whole quantitative tightening, SEC attacking crypto, Celsius failing, FTX failing, everything falling into a bear market. That's what would be happening here for that to happen. So I've been calling for the busted pattern because the opposite is happening. Look at all the bullish narratives. And not only narratives, I shouldn't say that. Look at just the bullish things that are happening right now that the industry has waited years and years for. Not to mention the business cycle, quantitative tightening slowing down, coming to an end, interest rates going to come down, money printer is going to go on. So if those things are happening, this is why I've been anticipating since back here in March, you know what? Yes, let's dip, tariff fear, do it, shake everybody out. But that pullback to the pattern and the busted pattern coming into play, that's what I'm watching for. And now we're getting very close to the busted pattern, really confirming. We are a moment away. Like this is $3,700 at the upper trend line. I want to see if Ethereum can break to the upside. But notice the resistance. And I can't say this enough. We're at lower high resistance that we have anticipated. So swing high to swing low, right back to the Fibonacci, the green rectangle. I'm very curious to see how Ethereum interacts with the 786 of this Fibonacci is $3,500 or so, and the 3,700 upper trend line. Ethereum is there now. I'm so curious. A power move through would be so awesome. But there might be resistance to everybody. We might find ourselves for days or weeks consolidating now. After this nice little power move, this is what crypto does. I'm not saying it's going to happen. Just anticipate it. Let's wait to see if we get this breakout confirmation, but there could be resistance. Maybe it's not weeks, but here's the 20. It just crossed above the 50. Maybe Ethereum just wants to go kind of sideways a little bit, pull into those areas. I don't know, but I'm definitely watching Ethereum, especially as it relates to acting as an altcoin indicator, because that's where it's important for me. So that's Ethereum. Going over to Cardano. Cardano sitting at 83.5 cents as I record the video. This is a very big indicator going off right now. And I want to explain why. You can see even actually back here, it was going off, right? MACD turning green, and it was actually kind of like sideways for over a month, and then it broke out. But it's even a bigger deal than here. It's even a bigger deal than here. And these are like the previous swing higher lows. They're good areas for Cardano. Here's why it's a big deal. It's because if you go back and you look at this moment back here, the entry to the bull market for Cardano, November 2020, guess what the MACD was doing? Right there. It was going green. The MACD was crossing above the signal line, and there was Cardano entering the bull market. And why is that so meaningful? Similar to what we just talked about with something like the Ethereum pattern. From a business cycle perspective, things have taken longer this cycle, right? Altcoin season delayed. It was like everybody had their alarm set for altcoin season. Things are taking longer, but the business cycle is playing out and approaching in a more bullish manner than it is a bearish manner. And the reason that's important, you go to something like the Cardano risk model. So here's our exit planner with a risk model open, but I want to go to the risk model for Cardano. And if we look at it, it's sitting at a 42 right now. So we just saw XRP sitting at a 61. Here's Cardano sitting at a 42. Where was Cardano in November 2020 when that MACD was making that bullish move like it's making right now? It was around 41, right around the same risk score, and the beginning of the bull move. So again, important to get in here. Members can set alerts. I think the 70s are an interesting area to set alerts for Cardano risk model. And then obviously 80s, 90s, and you know the story. But we're in pre-bull market territory for ADA right now in this chart. So when I'm looking at ADA on the weekly, now that we have that MACD move, here's the thing I'm paying attention to. And I've been talking about it for too long, it feels. The bottom of the bull market doors is the 200-week moving average in red. It's 63 cents. We are 20 cents above it. This is great because we were very recently trading below it and wondering, can we get back above it? But now the upper end of the bull market doors is around $1.20, $1.25. This is the move that I think is potentially setting up to be in play for ADA sooner than people even realize it could happen. It could happen very fast. You look at last cycle when ADA made its way to that upper end of that bull market door area. We had no 200-week moving average for the lower end, so it's kind of just floating there. But that upper end of the bull market doors is the 20-week moving average resistance into the bear. That being broken is massive. And so this cycle, this 20-week moving average resistance into the bear, when that is broken, it's going to be massive. You can see it. We almost broke it when we thought the bull market was starting in November, and we failed there, resistance. So that's that target that I'm waiting for ADA right now on the ADA charts. What is good to see on the daily is we've broken this kind of lower high trend, but still ADA has some work to do. You can just see the 20 is just crossing above the 50. There's not a ton of separation from the 200. It would be very nice to see if ADA can just rally a little bit more separation, even into the 90s. I'm not saying go straight to $1.25, but before we get consolidation, it would be very nice to see if ADA can make a little bit more, of a power move to the upside before consolidating. Because again, same as XRP, we talked about it. We're getting the 20 above the 50. We're getting a nice little move. These moves happen where we consolidate and we come back down. ADA could be back in the 60s. And people will be like, I told you, there's not going to be a bull market. It's a bear market. People will be saying that. That's why it would be good if ADA can get a little bit more steam to the upside. And even if it's going to test this area, this is a lower high Fibonacci area that is very close to the upper end of the bull market doors. So that's what I'm kind of tracking. I have this do not forget this moment box. This is kind of like a personal thing, but I'll share it because it's just exciting. We launched the platform, the CCV Intelligence platform, like somewhere here, like I think like right there, maybe. I'm pretty sure. And since we launched, it's just been almost kind of when I started my YouTube channel at the beginning of the 2018 bear market. It's been like that, right? And it's just been such a cool time to build this company and to offer the tools that we're offering. And I'm not forgetting this moment. That's my box right there. So I'll leave you with that on the ADA charts. If ADA, I'm curious to see if we can make it to this lower high Fibonacci. It's around $1 to $1.15. And what does ADA do at that moment? But let's just continue tracking. Please be careful, everybody. Be prepared for dips. Be careful. It's a mental game. So much of this is a mental game. But let's continue just tracking the data and staying unemotional because we've seen how this whole thing has played out. I've been doing these videos almost 8 years, and we see how the data plays out. So thank you for watching. Hit the subscribe, hit the like, and if you're not in our intelligence system, would just really love to have you back there. Give it a shot if you want. We have a 40% sale going on. But either way, if you're not a member, I appreciate you watching. I will see you in the next video. God bless.